Hey everybody, great to be back here with you. Mike Fairbourn for Markets and Sectors, looking at some of that analysis today. And really, among other things, wanted to take a look at highs and lows being made in the market, what that can tell us, and also diving a little bit deeper into a little bit more information in that regard as it relates to the advanced decline line and the trends within that. So look forward to that very much. Hope you're enjoying a number of our webcasts today that are promoted. This one is not. But great to have you here nonetheless, and always appreciate any questions, comments you might have about our discussion. Welcome to each of you. I'm joined in the chat by a good friend of mine, 20-year vet, I must say, Ben Watson. Many of you have seen him out on the road. Does a great job in our live events. Encourage you to view those if you haven't yet. But we've got Ben Watson on here. Very great to have Ben on board, folks. Great to have you here. Kurt, Life in the Fast Lane. Ray, how's it going? Ocean Life. Beth, how are you? Joe, great to see you. Nameless. Okay, we got Nameless here. We've got Will as well. Great to see you, Will. Folks, yeah, again, any questions, comments you have, type those in the chat. But I want to dive right into our discussion here. Interesting time within the market, isn't it? Could be a potential change. And so we'll take a look at it. Let's dive into some disclosures right now, though, to get the show rolling. Information here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper Money software application is for educational purposes only. Now, investing does involve risk, including for some products more than your initial investment. Futures and futures options trading does involve substantial risk. It's not suitable for all investors. We are going to take a sneak peek at that today. Some of those futures contracts. Some additional information listed there in terms of those futures contracts as well. Past performance is no guarantee of future results. And a quick note here, historical data should not be used alone when making investment decisions. The stacks is not a tradable index. The stacks should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. We'll take a look at the stacks today as well. Okay, well, let's do it. Let's dive on into some things right now. A quick note too, encourage you, if you haven't already, give Ben and I a follow on X, if you're not on X already, but gonna go ahead and just post my link into the chat so you've got that. I do post financial content from our discussions, really, that we have here, much of it. And so I just want to make sure you're aware of that. But of course, Ben's got some great content. Ben Watson CS, there's just mine right there. Okay, so with all that, yes, we are going to turn to the S&P 500 index. A few things to note on the S&P first. All right. Well, we've been talking about this level, haven't we, for quite some time? I've been talking about it for, I want to say, about 3 weeks now. But 5660 was an area where we did one of these when we broke through it. We broke through with a little bit of force on a pretty big bar coming down. But we came back and bounced up, though, folks. Look at this. We just kind of dragged. I mean, that was like 3, 4, almost 5 days, 1, 2, 3, 4, potentially 5 at that level, gapped up. Now, the 200-day moving average resides right in here. And I'm going to go ahead and just throw that on. Wow, we've got it here. The simple moving average, here it is. I'm going to resave this so it always shows it. Let's just go to a 5-year. And you know what? Let's give it a little bit of style, shall we? A little bit of color. Okay, so we ran up to that level above. So you got 5660 below, 200-day just above it there. But you'll notice what we get, folks, when we dipped down below. We dropped just slightly again, right? And we went down to, I'll clear that all off, a line right there. So this line has held support thus far, but notice again, as we're coming up here, we're just kind of like, today we bounced off it again. Very interesting. It's more indicative and more signs of possible consolidation. I mean, we're showing some indication that there could be resistance at that level. One thing I've noted over the years that I've been trading, and I'd be curious to know what you guys find. I always love to see your chat there. But let's see. Oh, let's see. They're not seeing the screen. Okay, interesting. Working on the issue. Didn't know that. That's interesting. Okay. Oh, no worries. Okay, I think we're all set now, folks. Okay, we didn't miss anything. We're on the same screen, so it's perfect. We've just lined this up, 5660. In fact, you guys heard everything I said, which was great. Now you can just visually see it. And so we're right there, just starting off, and you can see this little area here. We just right around that Well, what are we going to call that? I'm going to call it resistance now because shoot, we're holding below resistance. And here we are again. That was the support level there, showing a little bit of an indication here. I've kept this on as a long-term indication of possible resistance at this level. Now, one thing I was going to say, I know Ben's seen it because I think Ben's been in the market even longer than me. And sometimes when you see these, you get a couple of lows in here. Don't be too surprised if you get a couple of highs. And by the way, you might be getting those highs right at this level. So perhaps we might get another high right here. It's sort of a formation of a sideways channel, if you will. A little bit of a sideways channel could unfold there. What else do we have there? Gosh, I could think of one big line. In addition to that, that would be the 200-day moving average, folks, right there. But my drawing tools are a little bit slow today for some reason. I might just try to do a quick restart on those. Let's just redo that. Okay, but notice the 200-day moving average right there. Maybe we got it now. Cool. But right up to that level. So there could be additional reasons, is what I'm getting at here, for us to go sideways. Where it gets interesting is a possible break above. Now, of course, the situation with the tariffs, trying to equalize the tariffs around the world, I'm wondering if some of that has not already been priced into the market. What do you guys think? Has it been priced in? It may have been priced in already. We don't know. We do know that we've been holding this support level down here, which is interesting. And also, our RSI holding below 50 is just a key level that a lot of traders, investors will look for. If you're below 50, it just represents more weakness than strength. And getting above that 50, we might need to get above. We might get a couple of different signals. We might need to get above this prior high 200-day moving average to signal that and that taking off. Okay, but let's see what does unfold there. Right now, it's just consolidation, and yeah, that's really kind of the key point that I wanted to focus in on there. Now, I wanted to use a volume indicator. You guys know I'm partial to volume indicators in many ways. I do like to see, like, let's say, for example, the ES. What are we seeing over here in terms of our money flow, which, again, tends to net out, tries to net out, I should say, tries to net out buying volume versus selling volume. Up days, it counts the volume as an upward move. A down day, it counts as it as a down move here. How are we doing? Right there, you can see we just slightly broke above this high. This is referred to as a positive divergence. So on a really, really short scale, that is a positive. We are not making a new high yet in the markets. This is the ES. We have to use the ES, a gauge here on the futures, okay, versus the S&P 500. We have to use this because this is how we get volume down here, okay? But this little bump in volume was interesting. Basically what it looks like, and we might have seen this a second time around, but that's what it looks that traders, investors may be coming into the market on the pullbacks. And so that could be a positive for higher prices. It can be, according to the money flow. Money flow is just barely inching higher here. I'm going to do the money flow the justice of making it bigger so you can see it. Yeah, a lot of times I just expand these up like crazy, like when I'm actually doing my own assessments of the market, just so I can see them really clear. You got to be able to see the indicators. That's a new high over here. Price-wise, it is not a new high. That is a positive in terms of buyers coming in according to the money flow. Okay. Awesome. Okay, thank you for that, Jay Richardson. Yeah, sorry, folks. We're all back and ready to go. Perfect. All right, so let's take a look at this. But that's the 200. Now that's the ES. I'm going to jump back here and just dive right back into our SPX, and then look at that longer term moving average that we talked about a couple of weeks ago in terms of just looking at that. It's been very effective historically in giving us indications for potential bull markets and bear markets. It's called a number of those. It's just the 13-month moving average. We wanted to pull this up because it is a little bit interesting here. As I zoom in, I'm looking at actually 15 years because this is a monthly up top here that we're looking at. There's our monthly. And over that time frame, I wanted to show you just where we're at. So we did, last month, there you are, last month, that was March. We did dip just slightly up at that level. Now, the interesting thing about these long-term moving averages is this could be seen also as the possibility of support coming in here. It could be a support bounce. Remember, we're looking for the possibility of a close below here to signify a larger term decline. And again, these are months. Okay, larger term, yeah, but longer term, definitely. We're looking at months in here. This was about 7 months, I think, on this pullback. Once we pulled back down, closed below it. But right here, it could be a bounce. Have we seen bounces before? Moving averages can be interesting on a longer term scale. That's why, folks, I went through the process of introducing this to you. Notice that bounce right there. We could have said, oh, it's going to come down. Well, it bounced. And sometimes we get those bounces over here. There's a clear example of a bounce. This here too, that was a pretty good bounce. And then we ran up for, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 months roughly to this range. And that's actually a pretty good run over extended more than a year. Well, not quite a year, but it's a number of months, right, that we ran up. So it's in a very interesting spot here. So we're going to zoom back now and look at some of the daily charts and just say, hey, is this going to be one of these consolidations that kind of comes down here and then ultimately breaks down? What signs are we seeing? And that's why I really wanted to talk today about some of the lows versus highs in the market and what sort of an indication that can give us as we break this down, okay? All right. Yeah, absolutely. So I like the longer term views as well, Riceberg. I think they're helpful. I don't think a lot of people do look at, like, let's say, a weekly or monthly chart, generally because we're not often down to those levels. But it's good to know when we do get to those levels. And one of the keys that I kind of use in order to kind of clue me in to look at the monthly chart is right there. Where are we at relative to the 200-day moving average? Because it's a longer term daily moving average. And so I want to know where we're at, in that regard. And so, hey, then you can look at that longer term and see what's going on and see what we might be on the verge of here. All right. That's right. Yep, there's a lot of different economic data points you can take a look at too and kind of correlate with the longer term moving averages. Let's go in and take a look at a sector review as we go specifically into some of the advanced decline information, and then we'll take a look at highs and lows as well. First, let's just do a quick review of what we've got up top here. This was very, very close on the McClellan oscillator as we are using the McClellan. Within McClellan, we're using the NYSE, and it's a dip below the minus 100. You can see over here on the right-hand side, kind of right into our y-axis here. But if you go below a minus 100, and by the way, this was very, very close. I would be tempted to call that a minus 100 because it's approximately there. We're right in the 90, very close to the 90 range, minus 90. And then if you get back up above the minus 70, look at the follow through. Okay, you get back up above minus 70. So again, this can tell us, it gives us somewhat of like a 2 to 3 week indication of a bounce if it's coming off the bottom, and that bounce might be to the upside here. So it might position us, according to the McClellan oscillator, it might position us too over those 2 to 3 weeks right here. If we're looking at that in price action, perhaps getting above that level, and hey, we'll take it to the next step. Could it reestablish a longer term trend that we've seen in the markets, and could that go higher? That's the question. I'm interested to see what the seasonality shows. I mean, I've looked at it, but let's just see. We'll take a look at that just momentarily. All right. Flattening out still in terms of the summation index, taking a longer perspective view. That's a positive. We're not just heading down right now. We could actually be on the verge of reversing to the upside. So keep that in mind. I would say a couple of positives. It's kind of positive to neutral here on the McClellan summation, but still positive basically to neutral there. Now, dipping down and coming into the advanced decline line. So looking at advancers and decliners. Now, advancers and decliners are interesting. Let's look at that chart specifically, and we'll dive on into it. And by the way, just a quick note, Ben has posted into the chat a survey. If you get a chance to fill that out, that would be fantastic. I look at those. There's survey results in there. My manager goes through those as well. And two, if you liked today's presentation, definitely be sure and like that. Hit that like button. It does help get the content out. It improves the YouTube algorithm, so I'd appreciate that, as well as subscribe. Bottom right-hand corner, love to have you subscribe if you haven't already. And importantly, share it. Share the presentation with a friend if you'd like as well. All right. Well, with that, let's see. Here is our advanced decline line, and I'm going to really zoom in on it. I'm going to point out some key details here as we dive into the advanced decline line. Now, the advanced decline line is a technical indicator. It's used as a market breadth indicator. Now, why would market breadth be important right now? Look where we're at in the market. We want to see what's happening out there in terms of highs and lows being made. What's advancing? What's declining? Now, if you get a lot of decliners out there, well, you're getting a fair number of lows. If you're getting advancers, you might be getting highs. If we're looking at the advanced decline line, I just wanted to put those lines up here on the chart too as we examine this. But you'll notice over here that the advanced decline line, even though prices dipped down through here, you can see the advanced decline line did not take out those lows, which is interesting. In other words, the decliners didn't overcome the advancers, and we kind of held in a pretty good position. Now, where this might be interesting is I think actually where we could be going right now with that advanced decline line. Do we get advancers coming in, or do we get decliners taking over as we stay in this potential sideways channel? Now, prices could break lower. They could break higher, but if that does unfold, what does this line do? What does this do? Because this could foretell what we might see happen. And if we start to break lower right through here, clearly a negative. But if we can take that advanced decline line, if we can extend this up higher, that could be a positive in terms of buyers versus sellers. Now, the NYSE is a bigger index. We've talked about that before. But the advanced decline line, as we're looking at this on the NYSE, it tracks the difference between the number of advancing stocks, like we said, those rising in price versus those declining or falling in price on every day. Any given day is what we're looking at. Here's a day-to-day read on that. Now, it's a cumulative line, right? So it doesn't oscillate between highs and lows. It's like, hey, if you keep getting more advancers, it keeps going higher. But just to recap this, a rising advanced decline line suggests broad market strength. And that's why I wanted to bring up this area here. If we can get broad market strength breaking out, that can be a very, very interesting sort of dynamic here. Okay. And conversely, when it declines, it can indicate weakness. Where this becomes interesting is a lot of times in these sort of consolidation ranges. Let me just draw your attention back here. Let's take that off the screen and let's look at a sign in the past. And I'd encourage you to go through and take a look at this too, because it can be really, really interesting. But here is a decline. And we had a decline over here too. Okay. When we began to come up here in this range, and we could go into consolidation range. We did actually in price action a little bit. Look what the advanced decline line did. Wow, what a difference. What a difference. We had similar highs. In fact, the highs were a little bit lower in price. This over here was slightly lower. But look at the advancers and decliners right there. See how we broke right there? And I'm going to show you where that break occurred. In consolidation, if the advanced decline line, I'm trying to draw it as straight as I can. I've got to overcorrect over here now. But it's like right in here. Well before we broke higher, advancers were outpacing decliners on the NYSE. That can be a positive indication using really, it's really momentum it's momentum in terms of bullish momentum, stocks that are bullish, that are really quite strong, those that are really and bearish. And this line was amazing. And from that point, actually, we had a really, really interesting run to the end of last year. That was really about mid-August. We talked about that. Do you guys remember talking about this one? We're kind of back in that same area again. I don't know if we did for sure. We talked about the one I'm going to dive into right now, because I want to compare this with where we're at here and if we're getting any additional indications. So there is one other sort of indicator. Well, there's more than one, but I am going to add one in here. Gosh, it's kind of busy. Let's do it this way. I'm going to go over here and just put it in. Let's just say we're over here. I'm going to go into Uh, let's take these off. Sorry, when I pulled it over originally, it did not save, but it's referred to as the Zweig breadth indicator or the Zweig breadth thrust. I think is where it's most commonly known. I put it as indicator, but it's known as the thrust. If I go back here and just look at the S&P 500 index, that's the thrust. Now, what this is really quite interesting because it does look at the advanced decline line, the same line we were looking at. But what it does, the Zweig right over here, it takes a look at a 10-day period. 10 days. 10 days. And over those 10 days, it looks for advancers significantly outpacing decliners. And what does that mean? According to, I believe it's Martin Zweig, it's 40 or 0.4 on the chart. You can see 0.4 down here. And then there's a 0.615. Now, if we go between a 0.4 range to a 0.615, gosh, sorry, my drawing tool is like a little bit delayed and it's turning my writing really sloppy here, but you can see 0.4, 0.65. Where do we see it at? We see it right here. Boom, right there. To our red line, up to the 0.65 line, which I've got as black. You can hardly see it there. Let me change that real quick. Let's go into it. We'll adjust that line so we can actually see it. Heck, I'll just change it to another red line. Yeah, there's our black line. That doesn't help us. There we go. And let me see if I can just do one last thing in here. No, that's good. Okay, good. Yeah, perfect. We'll have a two red line on top. There you go. So there's a red up there. But you see how we actually did this within 10 days. It doesn't happen very much. But Mr. Zweig himself said, if you can get this unfolding within 10 days, that's a 0.4 to a 0.615 between those two lines, it suggests a powerful move because advancers are really exploding higher. Did the advanced decline line pick up on this? It sure did. But this one helped to confirm additional strength in the advanced decline line. Okay. And that's why I wanted to throw that out here. Now, let's kind of fast forward this to the present. We came right near that 40 right there. Here was the 0.6. We didn't get there. And so we did not get this indication, which means that, keeping an eye on the advanced decline line could be even more important because we did not hit the 0.615. So keep an eye on this and see what happens. If this continues to even strengthen, that could be a positive. But I wanted to just highlight it. We didn't get this here, but we got it over here. It's a really cool one to keep an eye on if you can track it, but that is the indicator. I'm going to put this to, if you don't have it already, let me just throw this out here. So you have it. I'll share it. Now, this one is, Martin Zweig right there. So I put some information in here. I think I got a portion of this already built. I'm not going to claim it as my own. I think I might have added just one little note to it, one little adjustment. But aside from that, I will, just in case, we'll call it, anything that is a think script, because, we had to kind of create this one ourselves. It's not one that came with the platform, so it has been built. And and I wanted to just state that with that, they're not guaranteed for timeliness or accuracy, but there it is right there for you. Okay, so they are not guaranteed timeliness. Or accuracy. Okay. Right there. Oh, thanks so much, Ben. And so there you go. But keep an eye on this, and now you've got that indicator. You can watch it. It can spot some really interesting moves. Anyhow, there you go. There's a little bit more of a breakdown on the advanced decline. And now I want to talk about lows and highs too. So let's get back to where we were at over on our markets and sectors. Let's see if we have any. Let's see. Are there any? Okay. Oh, looks like Ben caught that one. And let's see. That's right. Yeah, recession has been mentioned quite a bit. We'll see what happens. There's a lot like, with the yield curve, and we saw that. In fact, even if you go back a couple of years, I think recession was defined for a long period of time of, let's see, 2 quarters of negative growth, GDP, or something along those lines. Don't have all the data in here, but that wasn't officially termed a recession either. So we just kind of kept going higher in the markets as well. So maybe some of that they did call right, but it has been going around. There's no doubt about it. Yep, good point, Riceberg. Here is the SPX EW. That is equal weight. Equal weight can be interesting because a lot of times, what is that? That's a form of breadth as well. What's happening collectively amongst the market, right? Sometimes if the equal weight starts to make a higher high and a higher low first, that can be a positive for the market. You might have breadth. In other words, we might have trend strength behind the scenes too, kind of helping us out. That's why we look at the SPX EW. Just throw an EW at the end of SPX. Big picture though, lower low, lower high would need to reverse, and at least on a short term, we would see a short term trend though. This longer term downward trend, there could be signs of that reversing if in fact we were to go up here and break a high. Got to break it though. You got to have a higher high and we might have a higher low, don't have a higher high just yet. Okay, let's continue. Okay, so getting into, and this is our weekly chart that we look at here, because we do take a look at the Hindenburg almond down here. Watching these spikes are really relevant when you start to get the downward trend in the market. They can be really interesting. It does tie into 52-week new highs and 52-week new lows. And when you get a break, a large number of lows, a large number of highs, what can happen is the market can kind of create a chasm, and what can unfold is some indications of a downward trend. Now, the whole thing is, and we've got a lot of those indications we've been looking at, right? We've been looking at a monthly chart. We've been looking at key support levels. We've been looking at what might happen to the advanced decline line if it breaks below its kind of sideways channel as well. So there's a lot we can actually look at here, but these become really interesting when, like I've mentioned, you start to get a downward trend and you can see these spikes coming up here. That gap between 52-week new highs and lows becomes very, very big. And like right through here, it was a question, were we going to make a lower low and a lower high? Bam, right there, a lower high. We began to break lower. Those almond spikes kind of gave us a sign that could be unfolding. Do you see these last four right there? Do you know where they came in at? If I can draw a line up here correctly. All right, I already screwed up. Let's just do that again. Here we go. Right there. Look at that. The move coming up, which means that if we have a move coming up here, we get a fair number of lows in the market, which you've actually got some other indications. We've already been looking at the advanced decline line to help us. But if you get the almond spikes as well, it's just another indication that it could begin to curve over. So I think we've got a lot of good things to look at in terms of breadth. You guys getting this down? Is it making sense? Market breadth, looking at it big picture. Okay, let's do this. I'm going to go up top, and I want to continue on, but keep an eye for those spikes for sure. Let's go ahead and go to the right. One more to the right. There are our highs and lows. This is the NYSE highs and lows. For a while, we've been hitting above. Anytime we made a new high in the market, folks, we were clearing that 250 level, which is really interesting because we can use this on the low side as well. Those are the number of 52-week new highs. It's just basically annual highs on the NYSE. Anytime the market broke higher, we cleared that 250 level. We had that many highs that were occurring in the NYSE. Now, lately, we've been really kind of sucking it up towards the bottom. We've been holding down here. We have, like, today, 32 new highs out of about 2,700 and change. 2,700 stocks, about 32 are making highs. Not a ton, not a ton. Let's go up top here, right up here. Now, instead of highs, HGH, let's change the last three digits here to just LOW to get our annual lows. And now you can see the spikes on the other side. Bam. The 250. You see it popping up again. Very close to 250. The last few have for sure, but right there. What was that in the market? Instead of being new highs, which we were looking at for confirmation, these are like new lows that are occurring or lower lows right there. Now that's a new low. That was a lower low from here, right? Well, we hit 250. We had another lower low right there. Did we get another spike? We did. And what was really strange is on this dip right there, we actually got another spike above 250, um, but it wasn't a new low. That's kind of like a negative divergence too, right there. Now, we have since dropped pretty dramatically, which is interesting. So the market's really giving us a lot of interesting signals. I think it's just more than anything saying, really, really keep a close watch on it for a clearer indication because it could teeter or it could break. You know, there's just a lot of information trying to digest. The one thing I try to bring up from the very get-go is that the tariff situation, has that been priced into the market? If it has, then maybe some of these lows that were being made over here were part of pricing it into the market. And the market, let's just say hypothetically, has found its lows already. And now we're looking for signs of a possible bounce to the upside. More market, or more buyers coming in, advancers outpacing decliners. That could happen. But I think the tariff issue has, may have been responsible for this dip, but did it already price some of that into the market, just the uncertainty? Now that it's already out there, the news has been released or basically being released. Is that enough? So, maybe it is priced in. We'll see. We'll see if we get a bounce from here or what does unfold. Let's go over one more. I want to really look at the seasonality because if that bounce does unfold, if we see it come forward, well, look at what's happened over the past 10 years, just comparing, Jan through December down here on our x-axis. This is what generally happens on average over that time frame. Now, does it have to happen? Absolutely not. But it can happen from these levels. And if it did continue, it was a low right there, and here's a low. But we could actually see perhaps a rally up here. To do this, though, you know what we have to do? We have to break above the 200-day moving average, that range of those last highs on the market. So that's kind of the key indication. Will we have enough strength to break higher? Seasonally speaking, we might. We might actually break higher here, according to seasonality. But like I said, this is just an average of 10 years. On generally, this is what kind of like on average tends to happen, what we're seeing here. But these 10 years are made up of a lot of up moves and down moves. Let me show you. Have you guys seen this? If you go over here and click on the wheel, because we're just seeing the average of those 10 lines, but let me just prove it to you right here. If I go right into my appearance, there's my seasonality. Right below it, display. There's my average. Look at this. What if I just said yearly? Let's just forget the average. Well, let's do all of it. Let's do the yearly and average. Look at this. You're going to see 10, well, you're going to see 11 lines. But do you see on average, there were some that went down. I mean, that was a down year. But generally speaking, it was an upper year. Some of them, I mean, a couple of these were the green lines there too. But like, I guess this purple line was a flat year. You got a down year. You got one that shade went off towards the end, but the majority of them flat up. So that's what is making up that average line. And that's why a lot of traders will say, hey, well, what's going on here? But by the way, this is actually unfolded pretty similar to seasonally this year. It's just that the magnitudes have been different. It looks like this hasn't made a new low or maybe a similar low, but this was clearly a lower low. Keep in mind the potential for tariffs, but I don't know. There's still, if you look at tariffs, there's a lot of new hirings that are occurring out there too. And the offside of that is that it might attract more manufacturing and other businesses back into the U.S., just trying to equalize the tariffs. And so, I don't know. We'll see how it all pans out, but there could be some growth coming too in the economy. It remains to be seen, but that's what they're looking at. Maybe down the road a little bit. Hey, will it fall this year? yearly run. We'll have to wait and see on that, but that's the visual. At least we can keep tabs on it from there. Now, this is a shorter term chart we like to check out at the 30-day, 30-minute. And why do we like to do that, folks? The data. I don't know. I always think of data. If I can get more data out there, why not? Why not see what's going on behind the scenes? And that's where those shorter term, those intraday charts can be very, very helpful. This still is my 5660 line. Whoa, getting a way delay on my drawing tool. But there you go, 5660 line that we looked at on the daily chart. And now you can see it. Do you see all the intraday activity that we were getting at those levels? Boom, all through here, here, here. Beautiful gap right above it. Touch point, gap down, touch again. Wow, very interesting. Will we get a move here or not? Sometimes traders will even look and try to use multiple time frames. And what they'll do is they'll look and say, okay, well, this is a trend. That's a higher high and a higher low. If I can make a higher high here and start to break out above that level, on a short-term basis, we'll see if it unfolds long-term. But on a short-term basis, we might be getting strength that could continue on into a bigger run. And one thing I can tell you for sure is that you have to get the shorter-term moves to break higher in order to get a longer-term run. Because, I mean, it has to happen on a shorter-term basis, right? But this is really kind of one of the key levels we've been talking about, just keeping a look at that level. And now you can see where that support and resistance might reside at right there. It's at that level. And that's just real close to 5,800. So just keep that in mind. What I'm going to do over here is I'm just going to right click on my chart just above this level, above both these levels, you can see. I'm going to right click for signs of a breakout. I'm going to create an alert right there, an alert. So if we get a breakout at or above, I'm just going to simply type in here breakout question mark and have the Thinkorswim platform text me on my phone. I normally get those within 3 to 5 seconds, even on alerts that have been around for 2 to 3 years. If it hits, I get a very quick message is what's happened to me. And that's how it's worked for me. My experiences with it. And but that would let us know that we're getting a break here. Conversely, why not put one down below here as well, along these lower points? Put it really quite near, we have a little candle down here, that little hammer pattern. Why don't we put it right down below that level or right near it? I'm just going to put it below these lows and I want to put another alert so that at least we can be alerted. Now I've got to change this up top to at or below, but instead of a breakout, I'm just going to put a break down right there. And now I have a couple of cool indicators. The Thinkorswim platform has eyes on this for me around a couple of key levels that might be very relevant for the market. And of course, all the stocks behind the market as well. Up top, again, you go into the setup, application settings, you can go right over here into notifications. If you click on notifications, you can go in there and you can set up an email. Like again, I mentioned you can set up a text message. The computer can make a sound. I always talk about this because I found it to be so helpful and useful because there's just so many levels, even from day to day. I don't know if you guys are like me, but I'll tell you what, I can't remember all of these support and resistance levels, and I don't like writing them on a piece of paper because there's so many indications or so many ways for me to lose that piece of paper. I have to scribble it out, write something new. Just let the computer keep tabs on it for us. Over here in the Market Watch tab, it has tracks of all the alerts that we've got sitting out there that we can keep eyes on as well. So that can be helpful too, right? Just so you know what alerts you have that's in the Market Watch tab, and just go right to alerts. So with that, everybody, again, reach out, smash that like button. So easy to do. Helps improve the YouTube algorithm. I really appreciate that. Ben has noted that there is a survey in the chat. Thank you, Ben, very much for posting that again. And thank you for your help as always, Ben. Great. In fact, I'm going to do chat for Ben's class coming up, a promoted class. I really encourage you to take a look at that class coming up next. Ben does such a great job, and give Ben a chance to get into that and get going. But I'll be doing chat for Ben Really encourage you to view his class coming up next on, I believe it's Trading Growth and Value. So, in fact, I know it is. All right. With that, everybody, have a terrific rest of the day. Be sure and hit the subscribe button, like button, survey. All right. Ready. We'll see you next time. Thanks so much.